When you sell a property in the USA, you may be subject to capital gains tax on the profit you made from the sale. However, there are some strategies you can use to potentially reduce or defer your tax liability. Here are a few ways to save taxes after selling a property in the USA. Use the primary residence exclusion. If you sold your primary residence, you may be able to exclude up to $250,000 of the capital gain, $500,000 for married couples filing jointly, from your taxable income. To qualify for this exclusion, you must have owned and lived in the property for at least 2 of the past 5 years before the sale. Offset gains with losses. If you have other investments that have lost value, you may be able to offset your capital gains from the sale of your property with those losses, reducing your overall tax liability. Use a 1031 exchange. A 1031 exchange allows you to defer capital gains taxes by reinvesting the proceeds from the sale of your property into a similar property. This can be a complex strategy, so it's important to work with a qualified tax professional to ensure you meet all the requirements. Use depreciation recapture. If you rented out the property before selling it, you may be subject to depreciation recapture, which is a tax on the depreciation you claimed while the property was rented out. However, you may be able to offset this tax by making a charitable donation or investing in qualified opportunity zones. It's important to note that tax laws can be complex and can vary depending on your individual circumstances, so it's a good idea to consult with a tax professional before making any decisions that could affect your tax liability. Thank you for joining us today as we explored strategies for saving taxes after selling a property in the USA. With the right knowledge and guidance, you can take steps to minimize your tax liability and keep more of your hard-earned money. Stay tuned for more insightful discussions on finance and related topics.